guys, a Twitter buddy sent me a book recently, Trading the Measured Move. Thank him for that, and to let you guys know, I already have it and recommend it to all of everyone. It has a lot of great information, especially if you like intraday trading, opening ranges, talking about the measured moves of the markets and how algorithmic the markets have become, trading in and out of these opening ranges and daily ranges. I also recommend to my Twitter buddy and to all of you to check out Cynthia Case with a K, Trading with the Odds Using the Power of Probability to Profit. And highly recommend this. Just letting us know that the algos are in control and they rely on these ranges and probability distributions. So if we know what they're doing, then we can do the same, and that's what I've basically done. I've put the bell curve on the chart to allow me to see the monthly, weekly, daily, Globex, intraday, and or opening ranges. So I know where my boundaries are, and I know the points also of how much price should trade in the first hour of the London session in low volatility. For the E-mini would be, 6.75 points. Um, High volatility during the RTH session, um, quite a different story, 88, 89 points. So when you know what your boundaries are and you can tell where you are currently with price in relation to these ranges, and I can plot out and tell you where the 1, 2s, and 3s are on these various time frames and what the middle of the range is, the balance. So if it goes back to the mean, that's where it's going to be heading. You can know whether you're trading outside that balance with direction and momentum and upward slope on the volatility, or whether you're fading the edges, the volatility is collapsing, and you're trying to get back inside the middle. The reason the ranges trade inside the middle so much is that's where option traders get paid, right? They get paid if their contracts expire in the money. Um, so they don't want to be out of the money. They'll push it out of the money to run their calls, but they want it to end up back in the mean, um, to get paid on those option contracts. So it's going to get interesting because options are now going to be 5 days a week. And we'll have plenty of option contracts to trade to. So, in keeping with the 1, 2, 3, and I know where my levels are, I can put market analyzers up showing me like weekly ranges so I can keep my eye on it, or I can put it on the chart. I prefer keeping my real estate for the screen, so I don't need it as another market analyzer because I have it right here on the chart. Same lines. And I've got my volatility, so I know whether volatility is expanding up or down. And if it's going down, then I want to fade these lines. If it's going up, I want to break them, going to the, out to the next levels. And there is a intraday progression to this, if you will. Um, Price stays inside the ones, and then the first line it's going to break is the Globex. The second line, there's your daily, and then you would come down to your weekly levels, or you might be below. See, we were already below the weekly one, signaling that you want to be looking for shorts. And especially when this daily one breaks below the weekly one. So, do you see we were below the weekly one? And then finally, when the daily broke, that is exactly where the sell-off occurred. Right here. signaled the move for the market. So we can code this in Bloodhound, show you how simple this is. I use shark indicators to be able to create strategies using the PT indicator, as well as trade it in Blackbird using the strategies I've created, and also being able to pull in those ranges, those points that I can capture. So I just want to close below the daily PT1, put the PT in 3 on here, change the higher time frame to true, change it to a daily 1 period, and PT1 long or PT1 short, PT1B, and right click your chart, reload NinjaScript because you're putting a higher time frame on it, and there you go. I mean, when you have the power to know what you're doing in these ranges and break them. So I guess that was the one. The second one was the weekly. I'm sorry. I've got my, see, there's so many lines on the chart. I get mixed up. Yeah, broke the weekly one. So went through the weekly one. We did not get to the monthly. So that's where we were coming down to. Let me add one more. You are going to really like this. Hang on. And I'm going to have to put more days on the chart to see it. We broke the monthly one at that location also. So that's like big, huge. We left the monthly one. We were in the monthly ones, in the monthly value, and we just now broke the monthly one. So we're coming down, and here is the PT2 for the monthly with the weekly PT2. So going into next week, that is your bullseye target to start. Monthly, weekly PT2. Big, big targets. So that's for the NQ. Let me change this chart. Oops. Change this chart to the ES and we'll take a look. And you have even more room to go before you get there. It's much lower. Much, much lower. And there's a bumper. Do you see this big bumper sitting here? A block? So I'm sure that there's going to be a lot of pins sitting around these areas. The first one that we just bounced off of to the tick was the daily PT3. And this is the, I think, weekly PT2. Yep, weekly PT2 and 3. So there's your weekly PT2, and this is your weekly PT3 down here. Weekly PT3 with the monthly PT1. So there's your bullseye target for the E-mini. And like I said, it's easy to just wait till you get above or below a certain level. If you wanted to allow it to break out of the Globex instead, or the 1 hour IB, that was the daily one upper, went all the way through from the upper to the lower really fast on that news. And you can see how that daily one upper had been acting as support until that news broke. Now, we might see that huge gap down Sunday to that point and then, come back up, refilling. But next week is Vixpiration and OPEX, as I've been screaming, and that is when the ranges expand. So, where could this go on a much higher time frame? And that's why I have this chart set up. So I'm going to just expand, maximize this top part, and we can take a look at these lower ranges. So the white box is the monthly, and the last line is 39.21. So that 39.21 will be defended very heavily on the first touch. So that is your last line of defense. And if you you might put that in your level on your chart if price gets there like suddenly next week, at the beginning part of the week. If it floats down, if it screams down rather and breaks through it, I do have more tails I can put on the chart. Don't ever worry, I won't ever be out of tails. I can extend them as far as it's needed. If it's Six Sigma, no problem. In fact, I ought to just post a Six Sigma chart. I'll put that up later. And because you can draw your extensions out as far as you want to go. And so you can have an algorithmic roadmap. But for all intents and purposes, algos stay within their football fields, their boundaries, as is clearly seen when you just eyeball the chart and look at it like I'm showing it to you. It stays between the boxes for a reason, and when it goes outside the box, you know where it's going, and it usually will turn around at those locations and come right back in. So, got outside the boundary and rolled over, went back in. Here we broke out and went to the top of the threes. So that was a nice little run. So here was your market top. Then rolled over at the one, came back down. And then broke this range. But it really helps to have a roadmap for yourself and see that when you get to these lower levels, that here was March, got to the bottom and really clawed its way back inside quickly. The banks did not like that. They threw it back inside. But it came right back to test it and hung out on those lows. 1, 2, 3, 4, 5, 6 days. And then it dipped to the PT2 precisely on the tick. Are you seeing this? Right there. And they threw it back up. But you're way out in the weeds down here, and they being, like if you think of the Terminator robot guy, they don't stop. They won't ever stop. They will throw their firepower at it when it gets down there. And it won't go Six Sigma all in one fell swoop, is what I'm trying to say. They throw everything that they can, but the kitchen sink to get it back inside. So I would not, I would maybe just sit on my hands once it got down there, because it's just going to be a battle zone. Yeah. trade to it and then count your money, right? Well, I appreciate your time. I hope you got these levels. Let me show them to you clearly. We've got this real thick green line down here. That's the monthly 2 and 3. And the monthly 2 and 3 are, the monthly 2 is sitting on the weekly 3 for next week, right there. So 43.27, 25, and 43.33.75. Looks like a confluence area if it gets past the 43.79. But the gap down, if it gets below this monthly 2, going towards the monthly tails right away Sunday, then that is where we want to be measuring this monthly range and extending it down. Here's your 6 sigma. So there's your, maybe we, instead of a monthly, let's do the 6 sigma on a weekly. That kind of scary, trying to do that on a monthly. People are probably having a heart attack. You're showing the algos to go way down there. No. Here, let's do it on a weekly. All right, so here's your weekly 1. There's your range. So here's the 1, getting us right here down to PT3. 2. 3. Now this is, where a lot of people are going to be dip buying, like hedge funds and stuff, ETFs. They know 3 times the range is pretty significant, right? Here's 4. Here's 5. They're having serious heart attacks and palpitations. This is where the distributions, or the people just close their accounts. What is that called? The liquidations come in. Liquidations are occurring really anywhere below 3. And 6 sigma, by the time they get to the number 6, that's where everybody just piles in to push it back up, because it's such a long way. But just using those measured moves and knowing where you are in and out of these distributions is so powerful. I have to check myself all the time, because I know I sound cocky and crazy on the internet, but this is really mind-blowing stuff. Here you can see clearly that we, I just drew this line for that range over there, but ranges are fractal. You just trade to your level and take your profits. So that's what the PT is for, profit targets, profit target levels, PT levels. I'm not really using them as stop and reverse, but they can with that slope change, that change in slope. Really good example here in September, October. So we had this big September sell-off with their OPEX of expiration. And then in October, for the Santa rally, you can see that it rolled over the volatility and it just started melting up. So this can be traded multiple ways. You just have to know where you are in the distribution and how to approach your market. I have a day trading template, and I'm going to add this next. I just haven't done it. Let me show it to you real quick. I'll use the NQ to demonstrate it. Put this on a minute. 5. 30 days, make it nice and fast. And what I want to show you is, you know about the 1 hour IB range, but you can create your own custom 5-minute range series by saying what was the range between 8:30 and 8:35 off the open. And you can see, and I also add one off the close. Open and close. I put them both on there. Do a separate one off the close. It's a little bit of a difference, but that little bit of a difference can make a big difference if there was a big price movement. As you can see, there's two whites, and they do stretch out. And then you can put your current open, high, low, close, and just show the open. Right here. Need to add more days to the chart. And then I'll add the 1 hour IB. Well, first let's look at this. So here is a clear example. We broke the 5-minute range. Came down to the end of the range. Algos turned it around because they knew that they were into the 5-minute range. And then when that range broke, that signals the range expansion for the day. You can see it got out of the 5-minute range and turned right back in. 5-minute range is pretty big for the ES. Or this is the NQ. Let me put it on the ES. I need more days. Same thing, get to the end of the 5-minute range and they turn it around. Here we went right back to the prior open. So as far as measured moves, that's in line with the way that you can put these intraday distributions on your chart and have some really powerful levels nailing them. I have my own opening range indicator that I use as well. Let me put the 1 hour on here and the Globex. And the daily. Here we go. Here's your intraday helper. Very fine-tuned. When you're inside these ones, you see how wiki that is? As they're trying to get the direction set, they have not set it. So if you are aware of that, and you can just wait until you get below that 8:35 close, below that, don't even try it until you get that, and then you can use that as a permission to go. That way you can automatically stay out of it. See what I'm saying? You wouldn't have even got an execution up here. Really simple to do. Same thing, just plop a comparison solver, compare the closing price, and you're going to put that 5-minute range. And ranges are set the use time range true. 8:30 to 8:35, and ranges can be measured from the open or the close. And I recommend that you get used to that concept because they can be right click. Hang on one second. Change it to close. So yeah, we weren't getting signals until the bar closed above the 8:35 one. But if we change that, instead of the 1 to the 3, there we go. That's what I was trying to get. There was a false start here. It did fall out of the 3, but it came right back in. But here you can see, put this on a 10-minute bar maybe. There we go. 10-minute bar leaving a 5-minute range gives you a cleaner shot at the algos then going with that long direction. And putting the slope solver with this, let me start a board, call this below 8:35 opening range, and we can put this with the slope solver right there, put the PT indicator on it, PT2, no changes, just leave it the way it is. And then long short modifier, and you want to say long difference, long short. So now, just save this real quick. All right, so now you've got a, let me put, hang on one second, a bar direction. Just bar direction alone, leaving the 8:35 1 going out to a range in a methodical way. And you can put this back on a 5 minutes so that it's not a big of an ATR jump getting out of there. There you go. So that's going, you know that you're going with range expansion when you're out, when you've broken outside your line in the sand for your intraday time period. So it's a nice little intraday trading template to the 2 or the 3 that you're going to. So you leave the 1 and you go to the 2 and the 3. And I think that when I, was looking at that paper, that paragraph really, when he was explaining it for his perimeter ranges, Wells Wilder, I mean, it hit me like a lightning bolt. I'm like, well, duh. If that's the rule, then we can model it. And that's what I did. I did the 1, 2, 3 based on the bell curve, and voila, it works. It works. You can put it on different time frames. You know what you're doing now. You're leaving the smallest of the range ones going to the bigger ones. When you break those, that's when all the algos start kicking in. Not everybody's going to be trading a little 835 range, but we can because we know what we're doing, right? Or have that plan. I would not trade this as a standalone template. I mean, put your own other requirements in here if you want, a trend filter or a VWAP, something like that. But just knowing where you're going in that first hour or 30 minutes is so critical. So here is, put this back up, minimize this so we can see it, and minimize that. So when you're going from these levels, you know, in before the day even starts, how far you're going to. So if you're going to be trading a 60-minute range, um, 200 points is where you should be thinking about on a big volatility day, because it says so right here, 205.50 for NQ, and for ES 43.25. So 43.25. So let's look for 40 points. Let me put that on here. There's 20, 40, right there, 40.75, and this is 43.25. There's 43. Close, close, and 43.75. Come on. 43. Horseshoes in trading, right? Close is close enough. So you can put this on a level from that PT1, and looky there, look where price went. Do you see that? That candle? It went, are y'all seeing this? It went from the range, the IB PT3, from the PT1 to that exactly. And that's how I do it too. I measure them from the PT1s down for targets to trade to. Look at that. Pretty fun stuff, right? So mix and match your targets, and that way if you do decide to take a trade on like one of these big levels like that that weekly PT1, that's when you want to drop it down to a lower time frame, like maybe a 5 minute, and try to get positioned on that weekly one as close as possible to it. And then use your opposite, you know, line as your risk. I probably would have tucked a stop right behind that other one. So you have the 2-to-1 ratio, or 1.5-to-1. Try to give yourself something a little bit better than 1-to-1. And just give it a try. I mean, use your ranges. Know what a 15-minute PT2 is going to be. If you're in medium volatility, you know that you can go 16 points. Or that's what you're looking for from the head to the toe, from the high to the low. And Blackbird allows us to measure from the high to the low with the PT indicator. So you can set it up to shift your range dynamically during the trade session from the high of the bar to the low of the bar. So if you're going short, you would want the low of the bar to be below the high on a 60-minute bar, 43 points, right? You want to take maybe um, a little offset off of this instead of trying to get it to the tick. But the hedge funds front run them all the time. So trade like a hedge fund. Trade trying to get the maximum profit out of what's available. So maybe you would want to try to say, 95% of this you would try to reach, or something like that. And give that a try and see if that improves your trading. And set it up in Blackbird and test. I've been getting some really good test results. But, they're not supposed to be, they're not supposed to be given to you as algos. I'm just showing you how to trade various techniques using the PT indicator, because there's so many different ways that we can slice and dice the data and use these levels to backstop our trades, and know that if we manage to stay on this as support, then we are going to be wanting to float up, um, going to our statistical levels. Look at that. And just, rely on these probabilities and statistics, because maybe if the hedge funds are doing it and the banks are doing it, then we can do it too. Right here, right in front of you. So you can get it through NinjaTrader or through Substack, just the levels that I post, and then draw the lines on your own chart. Or I've even provided Excel spreadsheets so that if you are have that much acumen, you can import those into your own indicator. All right. Thank you so much, and we will talk at you soon. Bye-bye.